And talk to Vincent Truglia. He's a frequent guest here on Fast Forward. He's managing director of global economic research at Granite Springs Asset Management. He was also the head of Moody's Sovereign Risk Unit. Also worked at the New York Fed. Quite a long resume, Vincent. Always good to have you here. We were speaking on the phone last time, not that long ago. And this just seems to be happening in slow motion. It sort of surprises me that we kind of are talking about the same thing on a daily basis. But default seems imminent. I guess the question is whether or not it's orderly or disorderly, a topic of conversation we had the last time.
Yes, and in fact, this is the same conversation we've been having for months. Right now, given the teleconference that is we hear is underway, what I assume is happening at the moment is that Angela Merkel and President Sarkozy with Papandreou are trying to figure out how they can somehow provide funds to the Greeks for the next tranche, even though the Greeks, in all likelihood, have violated the requirements of receiving that tranche. So they're trying to, I think, trying to find a way to fudge the numbers.
Do you think they're going to deliver that tranche, perhaps, but at the same time we could actually see Greece no longer be part of the euro? Is that a possibility?
I don't think that would be a likely scenario. An exit by Greece from the euro, you wouldn't have to be providing all this money if you had a sure way that Greece would exit the euro. You would just let it exit and then have all the Greek debt denominated in drachma again, and then it would fall in value against the euro, and then the Greek government would probably be in better shape after a very severe crisis following the exit.
What's likely to happen as it relates to the euro? I mean, so many people have said Greece should just really exit the euro at this point.
The problem is no one knows what would happen, and the great fear is not really a Greek exit. The Eurozone could live without Greece, but the question becomes, what happens to Italy? It doesn't even matter what happens to Ireland and Portugal. It's Italy that's the key. And if you think that the Eurozone itself is going to be shrinking, then the Italians would be high on the list of potential candidates to exit the Eurozone or to default, and the Eurozone just cannot bail out Italy. The debt is just far too large, twice the size of Germany's public sector debt.
At some point, they have to take a stand, and why not take a stand at Greece? Because if they don't, they're going to have to do it regardless for one of these countries at some point. So let's turn now, though, to what's really happening with the economy in Greece and elsewhere throughout the Euro region. Unemployment quite high in Greece. I was actually startled to see, though, that Spain's unemployment rate is 20%. Many of these countries now talking about austerity measures. Of course, Greece, that seems to be priority number one. We see sort of a daily roll call of various things the government's trying to impose upon the local population. But at the same time, doesn't this also get in the way or stymie their recovery on some level?
Well, this is the exact reason why I've argued that the Eurozone has structural flaws that can't easily be fixed without an exit by the peripheral countries, because you keep requiring more and more austerity. And in fact, in the Greek case, one of the major reasons they're not going to be meeting the requirements of the bailout is that the economy is shrinking even faster than expected. So revenues keep declining. So it's a vicious cycle that's very difficult to break. I don't see how it's broken without some major change in policy, either exiting the euro or a total transformation of the nature of the Eurozone.
Well, Vincent, I don't want to ask you to forecast what's going to happen in a month from now or by the end of the year, because things are likely to stay the same on some level. Certainly, that's what history suggests. But let's fast forward a year or 2 years from now. What do you think the euro looks like, the Eurozone looks like? Do we see these countries more tightly bound together? Do we see the issuance of a common bond, a euro bond? Do we see sort of fiscal measures that cross across throughout the region and bind the countries a little bit more closely together, like states, sort of as we have here in the U.S.?
That would be on somebody's wish list. I don't think that's going to be the reality, because the politics in Europe, especially in Northern Europe itself and in Central Europe, just is not going to allow Europe the kind of fiscal consolidation that would be required. Just not going to happen. Germany is just not going to take and bear the responsibility of an Italian government debt that's twice the size of German government debt. I just don't think that'll happen.
All right, Vincent, always appreciate your insight. Thanks for joining us here once again on Fast Forward. That was Vincent Truglia of Granite Springs Asset Management.